presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to our man George in Newport Richie. George, what's going on, brother?
Hello, Tom. Good afternoon. How are you?
I'm doing great. Yourself?
Yeah, great. I've been following you for the last few years, listening to your show.
Well, thank you very much. I appreciate it, George.
All the hard work you've done for us over the years.
Well, I really appreciate you calling and saying hi.
My pleasure, Tom.
Okay.
I'll listen to your show.
Thank you, man. Have a great one, a safe one. Appreciate it, man.
Now, Tom O'Brien.
Welcome back, everybody. Welcome back. Hey, how you guys doing? Sorry, camera's back. New kind of adjusting back to that. I hope you all are having a fantastic day. We are going to be joined by Tim Ord today. I know he was on yesterday, but luckily just so had it that some pretty intense stuff has happened today. Of course, you had the new tariff list roll out. We're going to talk about how they basically arrived to those numbers because it is kind of strange. And obviously you can see right now, I mean, the SPY is shooting off 4.0 shots. Oh man, look at that. So the tariffs hit us so hard we can't afford to share the screen anymore, guys. I'm sorry. No, I'm kidding. All right, let me get that live. Okay, so you have the SPY trading at 541.80. Listen, I mean, I feel like, you know, this is definitely a big gap down, and it is on some volume. And I mean, you know, you're trading back to these September levels, right? I mean, don't get me wrong. I mean, this is from our high here in February down here. I mean, this is a tough move, right? And I'm still not very convinced this economy, bar tariffs, is in a good spot. And I think you're seeing a positioning from big money in that way. Of course, we're getting the 10-year skyrocketing right now. You know, I still question the idea of lowering interest rates to a certain extent. I mean, these are getting close to the projected Fed fund of the end of this year, which is about 3.9. You're trading about 4.1 on the 10-year right now. You know, and so, I mean, things like TYD, which is the 7-10-year Treasury Bowl ETF from Direction, I mean, you're up 3.14% in that. You know, and like, so luckily, like, I'm in cash for sure, and I didn't know which way this was really going to go because I believe it probably could have been spun in a lot of different ways. I still think there's issues in the economy, again, regardless of the tariffs. You could still see price increases, and you can't really lower interest rates in that. Inflation is still somewhat strong. You have the composite definitely getting smacked very hard, off 5.23% at 16,681. And the Dow Jones Industrial trading off 13.35%. You're off nearly 1,600% earlier, 1,600 points earlier this morning. Quite the movement to the downside. And of course, the Russell getting the brunt of it off about 5.83%. The dollar is getting some ground back. I think we traded to a low today of around 101, 101.26 roughly. Crude oil totally getting smacked off 6.78%. Now, there is OPEC essentially is going to produce a lot more oil, right? So this is kind of like flooding quite a bit. So you're having some depression in that as well. But again, a lot of this is from the tariff shock. I think a lot of people probably anticipated him, you know, not to put these tariffs out, but he did. Let's talk about that a little bit. And yeah, guys, we're going to talk about Intel. I mean, Intel is roaring right now with some deals with TSM. Now, what I also found strange about this to some certain extent is that Trump says that the chips will not be a part of the tariffs. You know, I don't know. I think this, to be honest with you, I think this thing is changing by the hour in a lot of ways. Let's take a look kind of at how they're arriving at these tariffs, because in reality, what it is, if you look at it from the U.S. perspective, of course, it's deficit to, it's essentially a deficit to import ratio, right? If you look at it from the other country's side, it's the surplus to export ratio, whatever it might be, whatever kind of way you want to spin it. That's essentially how they're doing it, right? And I want to pull Oh, come on, man. Where is it? Here, actually, you know what? It's in the Discord, so we're going to do that. This is why Discord is so good. I'm going to pull up this equation just to go through it because I think, for whatever reason, this looked very complicated, right? And it's not actually complicated, but the part of using Greek letters, I feel like, to be honest with you, I feel like that was them trying to kind of impress people a little bit because it's not necessary to do that. And I know a lot of people were saying, wow, that's, you know, especially online, like very complicated. These guys know what they're doing. In reality, it's a pretty simple formula in a weird kind of way. Let me open the link here. See if we can get it. Okay. Also kind of not getting the delta because that's the change. But anyways, what this is the net exports, right, minus imports of the country. Okay, and then this is essentially the elasticity of imports. This is the pass-through for tariffs, right? And then this is over imports, okay? So it's kind of bizarre because, and again, and why I'm saying this is unnecessarily complicated, because these things equal 1. The value they chose for elasticity, and again, I'm not sure I understand why they picked these values, and they do reference papers for why they picked these values, but these essentially equal out to 1 for each other, so I'm not sure what the point of including it is at all. So this is going to be 4 they picked, and they picked 0.25 for the pass-through rate. And so all you're getting is exports minus imports divided by imports. You know, and so it's a very bizarre, and again, it depends on how you look at it. If you're from the US, you're going to do deficit divided. For another country, it would be the surplus over the exports, right? And you get roughly kind of the same answer for it. And then what they do is kind of just, I mean, if you take it from the other end, they're just dividing it by 2, and that's how they're getting the tariffs. It's very bizarre. So, and again, that's not really a tariff, that's just a deficit. And I was like, this is strange, this is not a tariff. And then I want to look at this picture that I have on my phone, because I want to read out to you this. Yeah, so you had a Congress guy say, tariffs are customized to each country. Sorry, an administration official. Because this is based on the concept that the trade deficit that we have with any given country is the sum of all unfair trade practices and the sum of all cheating. Okay, so that's an administration official said that to reporters. And it's kind of strange, right? Like, I don't know if you can necessarily use that as a proxy. I mean, you consider stuff with like Vietnam, for instance, that got totally hammered. What are they supposed to do? I mean, you either increase imports from the US to try to balance everything out, or you decrease exports. It didn't adjust really for the size differences between the countries. And so it's kind of a strange thing. I don't know. And this isn't political at all. It was just a very interesting way of getting that number, and I'm not sure, I don't know. I'm not sure how that's going to work out. Folks, Sarah, they'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Yeah, welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien show. We're in the den. This is kind of the list, at least for the first page. And you can kind of see again what's going on here. It really does look like they just kind of halved it, right? And yeah, I mean, Dan, to what you're kind of talking about with it, how unscientific to some certain extent is. I think even probably there's been some people writing about this, like even determining really what reciprocity would mean, I think is extraordinarily difficult. So it's interesting that they're using a deficit as a proxy in a way. And I don't know, I wish I were still in the communication. I had this amazing, man, he really changed the way I thought about, problems like this. It was an international economics class when I was a senior in college. And the professor taught like pure logic and reasoning at the University of Tampa. I didn't go there, but he moonlit at my university. And man, it was just so interesting. And I wonder, what he kind of thinks about all of this, because he was an interesting guy. And then, PLS, what are you saying on that? Yeah, anyways, this is how they're doing it, It's really kind of interesting. So, yeah, I don't know. And then, we're joking, like, you have like these small islands like Svalbard, which is just some little Arctic forward island getting smacked by massive amounts. Poor, like, Lesotho is going to get just totally annihilated. And again, it's like, what do those countries do in this circumstance, There's just, they can't. I mean, they can't increase, imports in the U.S. You're going to crater your own kind of economy, and you don't even have to have tariffs on them, for this to affect you. I mean, that's really what it is, because it doesn't really have much to do, I think, with any place tariffs. And again, I think a lot of people kind of thought this was going to be like industry for industry, right? I mean, same with the autos and stuff like that. So anyways, kind of interesting. What was the Penguin Island called? Yeah, flightless birds are getting tariffed as well. And I wonder, if this gets kind of adjusted going forward, right? Yeah, Heard and McDonald Islands. And you can look on Google Earth and kind of go to the northern, the North Pole, and kind of see all these small islands that are like their own entities in some strange way. Yeah, a 10% tariff is put on Heard and McDonald Island. And a lot of these are just like random research islands, Anyways, that's kind of what's going on here. To be very clear, they are using the deficit as a proxy for amount of tariffs, right? Because I would argue too, I mean, like, I think we have some, I don't know. We'll talk some more about it, because right now we are joined by one of our favorite contributors here. This is Tim Ord of the Ord Oracle. you should go over to oracle.com and check out what he has to offer. Additionally, you can go to TFNN.com and go to that services tab, and we have 2 fantastic webinars. There's a lot of questions. Have we made tops? Have we made bottoms? He actually has a very good webinar, now that I think about it, over on the services tab, and that is the secret science of market tops. Check these out. Tim, are you with us right now?
Just listen to your commentary, so you sound good on the radio. Anyhow,
thanks, Tim.
Let's look at this. Is a little bit on the frustrating side.
Yes.
I'm still long, and actually, I still think we're at a short-term low. The news came out about the tariffs. The market knew the tariffs were coming. Even a couple of weeks ago, I thought it might absorbed into the market.
Yeah.
But as soon as he started speaking yesterday, the market plunged. But this is a chart that looks at the bigger picture again. This is a 3-week average of the Association of Individual Investors bull-bear ratio. Anything below 0.75 is bullish, which that happened actually a couple of weeks ago. This is a weekly chart, so it doesn't pretend to pick out the exact day, but it picks out normally majority of the bottom, I'll put it that way. So this indicator is still at a low, or 0.42 right now. So anyhow, indicators really don't lie. They really tell, at least if you get the right ones, to tell the move of the market. So let's go to chart number 2. We actually had this yesterday, and I think the ratio was around pretty close to, I think it was 25.29. Well, anyhow, the middle window is the weekly, because I'm doing everything on the weekly right now, is the SPX tilt ratio. So that's the bond market against the equity market.
Yep. It
measures the fluctuation of them. If the bond market's doing much better than the equity market, the RSI goes way up. If it goes and vice versa to the downside. So it's kind of like a rubber band being stretched. And this is a weekly chart again. So we're at anything below 30 is the bottom. We're at 25.47 right now. So we're looking at least some sort of a snapback rally. And the next rally will tell kind of a story of what goes on next. But I also want to point out this chart. This ratio very seldom gets below its lower Bollinger Band. Right now we're 100% below the open and close is 100% below the lower Bollinger Band, which is the extreme right window here. And same with the weekly SPX. We open and close. The close is, it's a weekly. Depends what tomorrow does. But if both of them close below the weekly lower Bollinger Band, it's really stretched. And I can pick out several times over the last several years, but there's not many times. So it's kind of a rare occurrence. It's happening right now. Does that mean these indicators don't work anymore? Not at all. They are going to work, and you probably see some sort of snapback rally. I hope not tomorrow, and I'll explain that later, but I hope this market actually stays in this vicinity and not rally tomorrow. And I'll tell you why before what happens, because you don't want it to rally. Here's an indicator that actually gave a buy signal back at the March 13th low, which is basically this is the weekly VIX hitting above the upper Bollinger Band, and the SPX hitting below its lower Bollinger Band. That's normally those signals are right off the bat, normally work right away. Here we got one, we got actually another one right now. So the first one evidently has failed, but now you got 100% of the trading range on the weekly time frames below where the open close below the lower Bollinger Band. You can kind of see it over here, and now you're way above the upper Bollinger Band on the VIX. So that means VIX accelerated that's 2 standard deviation away from the norm. So the market kind of normalizes itself. It goes. For bottoms, you really want the market not to creep down, but you want to crash. And for the uptrend, you want for a topping out of the curve, you want to kind of have an exhaust move to the upside. Those are usually a little easier to pick out. The ones that kind of creep up, go on for a long time, or the markets that just kind of creep down can go a long time. So you want to...
Popular man.
So you want to... somebody's trying to call me here. But anyhow, you want to see acceleration. Acceleration is the key to this market.
Sure.
So we got quite a bit of acceleration to the downside. You got acceleration to the upside. And that's kind of chart proves it. And this is on a weekly time frame, not a daily. So you're looking at a bigger time frame for something to occur. So wherever the next rally starts, it's usually a multi-week rally. So that's I'm still thinking the same thing, even though the market's down. So it's kind of look at. Oh, okay, got our break already?
Yeah. Well, Tim, can you stay right there? I know we have a lot to talk about today, so. All right, folks, stay right there. We'll be right back with Tim after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the 2nd and 4th Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Tim Ord of the Ord Oracle. Tim, before we went to the break, we were taking a look at some charts of the SPY.
Okay. Here's a daily, and I kind of crude. I meant to put this in, but I put kind of a crude deal. But we closed yesterday up here. This is what I'm talking about, right? This area right here, and the market, closed up here and opened up down here, which is close to 4% gap down, and it's probably an exhaustion gap. So you get gaps that big. There's a lot of energy in those. If you get small gaps breaking through areas, they can continue. But if you get an exhaustion gap, which is, this is huge, it's, 3.5%, 4% gap down. So I'm thinking this is an exhaustion gap. And also, if you notice over here, we got to close below the lower Bollinger Band. This is a daily. Like I said, just a minute ago, we close. If we stay around this region, the open and close on the weekly time frames will be below the lower Bollinger Band. And this is a daily. So if we close in this vicinity here, we'll have the open and close on the daily below the Bollinger Band. So you got a combination of weekly and daily. And what I really want to point out, if this market, if you look at the lower Bollinger Band here, we're kind of going sideways, sort of. Then you close below the low Bollinger Band, the market took off. Here you kind of got a sideways Bollinger Band on the lower Bollinger Band, you kind of took off. And kind of saying here, it's actually Bollinger Band was rallying, but the Bollinger Band is actually higher than it was a couple of weeks ago. And you got a kind of same situation where the market, lower Bollinger Band is actually semi-trading sideways. So I still think this is the low in this vicinity. What's lacking on this decline, but it seems to be changing right now, is a trend. We're trend just not blowing out, but today we got a 1.19. That may change a little bit, but it's kind of been rising over the last couple hours. We got 482 downtick readings. If we get that combination on the close, that suggests you'll have a low today to as late as 2 days later, which would be Monday. So I still think, the tariff announcement put a lot of chill in the market, but I don't think it's turning into a long-term bottom, but rather exhaustion to the downside. And I like to see panic, and we got panic in kind of several different indicators, but trend is my main thing. I think sometimes you don't get it. If you don't get a panic on the trend reading, you get what you call a dead cat bounce. A dead cat bounce is not a lasting rally. It goes up and comes back down. And that could be developing here. But again, if you ever look at the bear market rallies, they're fast and furious. Yeah. They just totally blow up to the upside. So I think that's what's in front of us over the next couple of weeks, is some sort of a dead cat bounce to the upside. And normally, if you close below the previous lows, which if today's trading holds below the previous two lows, especially on the weekly time frame. So we actually stay here in this vicinity and close below the last 2 weeks lows. Normally, if you can't hold below the previous lows, you break out to the previous highs. So that's why I'm saying we're probably going to, if we can close here tomorrow in this vicinity, even a little lower doesn't really matter, and you turn around and come back up, you'll take out this previous high up here. Okay. So we're back up, probably take an attempt to probably get back close to the mid-Bollinger Band, I think. There's always a story at the bottoms, too. Whatever it is, everybody leans on that story for the reason to stay short or stay long, whatever the reason may be. They call it the hook. Nice. And this time around, it's the tariffs. And next time it'll be something else. And it's all absorbing. And so we got the hook, we got things. Ideally, we'd like to see the trend today close around 1.2, preferably higher, and ticks exceeding minus 300 to the downside. If we do, the odds really increase that, this is a low of worthiness, I guess, and some sort of a rally back up to at least break the previous highs. So that's my prediction. I am actually long from February 25th. So I did a couple things wrong on this trade, but I still think I'll get back close to even. And depends how the next trade goes. If we do have a sign of strength off this low, that'll change the will change the perspective of everything. And you can have signs of strength in a couple of different ways: advanced decline type of sign of strength, or a volume sign of strength. Either one, or preferably both. We'll be watching how that rally performs. So if we get really strong rally off the bottom and you got advanced decline going with it, then you got something real. If you don't, it's probably a dead cat bounce, and could be a hard year. So we'll see how that works out. So got the gold market.
Absolutely. I think we need to cut into it. Obviously, I know we talk about the miners, but I just want to put out the gold contract itself is kind of pulling back as well with all of this news, off about 1.32%. What are we taking a look at with the GDX?
Actually, one more thing on here, and this is a weekly chart. Kind of shows you what I'm looking at. Volume. This is current volume a couple hours ago, but ideally if volume is less, 10% less than the previous low volume, which I got an arrow pointing to it, then that would be a weekly buy signal on the volume studies. And you can see that we're closed below the lower Bollinger Band. That's the reason why I don't want to see a rally this today or tomorrow, preferably below that lower Bollinger Band. Because what happens normally the week after would be something similar. Like a lot of times they gap up, but they don't let you in. So
right.
If they don't let you in, it's going to go for a while.
It's because you're looking at that Bollinger Band, like that close below the Bollinger Band on the weekly, correct?
Yeah, on the weekly. Yeah. So a lot of, anyhow, usually these rallies off these lows are really fast. So, and usually on Fridays they make you scared, so they make you sweat all weekend if you're long. So the Friday's usually the best time to buy. But we got a couple of minutes here, I guess.
Yeah, we can stay over to the next segment as well if you need to. So, all
right, this gold market, there's really nothing. This is bottom indicator. This is a 50-day average of the up-down volume. So it's about 50 days was it's what 3. It's a long time. So it's a big moving average, and so long this moving average up-down volume stays above 0, right here, the uptrend's intact, and all that green area is what's happening. And we're not even coming off the very high levels here. We're staying pretty close to plus 12 or 1630 right now. We're staying close to that plus 20, plus 15 area. And that shows the up volume is way exceeding the down volume. And that's what happens in uptrends. So uptrend's still intact. You can have some minor pullbacks, but not top of any consequence.
Well, Tim, do you have time? Perfect.
Yep, I do.
Folks, stay right there. We'll be right back with Tim Moore to talk about GDX right after the break.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. We're joined right now by Tim Ord of the Ord Oracle. You can check out his website at ord-oracle.com. Tim, before we went to the break, we're just cracking into looking at the GDX.
Yep. So anyhow, this momentum chart is a 10-day. Well, it's actually a 10-week average, I guess. Anyhow, it's bullish. So as long as this indicator stays above zero, the uptrend's intact. So it's not getting any weaker because this indicator is just still holding pretty strong as the market. It can go up and down a little bit here, but you got 43, which is basically the previous high support. And before, I think this whole thing's. This whole pattern here is a head and shoulders bottom, which has an upside target around 65. So we'll see how that plays out. But on a short-term basis, there's not seeing any weakness yet. So I do have an 18-day average and of an up-down volume and advanced client indicators. They're also short-term. They're staying strong. So even the short-term looks okay. So not any signs of a top of any consequence. So looks good. This is last time or yesterday I showed the monthly chart of the bottom window is cumulative advanced decline, and this is the weekly chart. Next window higher is the cumulative advanced decline on the weekly time frame. As long as those, so it looks at a different picture of the same thing, I guess you might say. But as long as those two indicators are trending up and making higher highs, which you can see they are. Both of them are making higher highs. The uptrend's intact, so no divergence. The buy signal that comes when both those indicators close above the mid-Bollinger Band. The sell signal when it closes below the mid-Bollinger Band, and these are the sell signals back here and here. So these indicators when they trigger, usually they're about a year and a half to 3 year time frames. So we got triggered, I think, back in March of last year. So it's been about a year into this move right now. And right now there's no sign of a reversal. And we're actually a long way from mid-Bollinger Band. So I don't see any trouble to concern right now. So these gold stocks are starting to perform. And I think we're still fairly early in the game. So this could be... Back in 2000, I actually caught that low, and me and Tom O'Brien rode that I think went on to 2012. So you had some consolidations along the way.
Big time.
But I'm thinking we're something similar to this. We'll have some consolidations that may last 6 months, even 9 months consolidations. But I'm thinking this cycle around is a bigger cycle because a lot of these gold stocks totally got decimated. I mean, some of these dollar, or $20, $30 stocks went into, the penny market. And so that's going to, so I think that there's a big move here starting, and we're still early in the game. I'll put it that way. Now, if things change, these indicators will change with it. So, but right now, I don't see a top of any consequence. I'll put it that way.
Okay.
So, you got questions?
No, I think this is great, and it's nice. I'm kind of, obviously with listening to the GDX is fantastic with it, and I'm still digesting a lot of what you were saying, even with the SPY, right? And I am concerned a little bit, if I can kind of go back to that for a second, of kind of what you're saying with like a dead cat bounce. I'm still, and again, like I'm hearing some talking heads continuing again. That's not the full sentimental picture, right? But it still seems like there is somewhat of a positive sentiment even after today. And so I get concerned that, from that perspective, you can see more money kind of pumped in and we get something like a dead cat bounce, right? I don't know if I'm sure we'll keep following along with it. But anyways, I just find that interesting that you might be able to see something like that as well on your end.
Try his charts here. I'm thinking we're going for this low right here.
Yeah,
that's what we're thinking for. But anyhow, we're not too far away from it. But the people really make the money in the market is people that walk in when everybody's exiting it, and so you got to have indicators that find out where the fear is. So panic is the best friend you can have in a market.
Yes.
And are we having enough panic right now? The only thing bothering me is the trend. And I think that's the reason why I'm thinking this is probably the next rally. It's not going to be a real rally.
Wait, isn't that strange that the panic isn't? I mean, yeah, definitely. It doesn't seem like there is that.
Right. And the trend kind of identifies that. So you'll have just really strong rallies, and they kind of blow themselves out. So I'm thinking that's what's going to happen here. So I'll be getting out on the next rally unless we see some sort of spike in volume where it's and also a spike in advanced decline. I don't think that's going to happen, but it could. If it does, I'll play it. But I still think the best scenario is probably up around the mid Bollinger Band. Then from there, I don't know. So I don't know, but I think this low here is probably going to. We're attempting to test it. I'm watching. This is a weekly volume, and we talked about the daily volume. But if we get the if we get the weekly volume less than what happened to the previous lows back on the week of March 13th, then there's probably a legitimate buy signal that could last a month or at most.
Right.
Probably. Then and usually tops, the volume kind of just drops out. It just really dissipates.
Yeah,
so
as
we'll
you
see
keep
how
going.
that.
Right.
Yeah, so it gets real narrow, gets quiet at the top, and it's kind of tricky at the top because top takes a lot longer than bottom.
Well, and you can see that on February 20th, 2019. I mean, you had that high of 613 and just a lot of contracting volume throughout that time, and then that really kind of marked our descent, to the downside.
Which is also the previous lows. And I was thinking about it, taking that position off. And I'm thinking, well, it could pop through that. A lot of times the market kind of fools you a little bit. Now I wish I did. And look for a reason to get long again, which I would be probably long again tomorrow. But I'm not. And so I'll wait to see how this dead cat bounce, I think is probably what it's going to be. That's a rally that doesn't really fall through to the upside. They call them dead cats. And but it could turn an impulse wave too, which are real waves to the upside. But you can also see quite a bit here. Energies, if you look at this, the volume to the downside compared to how you were going up into the upside, this volume here is quite a bit lighter than what's going on right now. So energy goes in the direction of the market. And I wish we had panic here, a lot more panic than what we got. We don't. So it's going to be a tough year probably. So
I think so too, Tim. Well, Tim, listen, thank you for coming on. I know it was 2 days in a row, but we had some great stuff happening today, at least with market dynamics. So thank you for coming on, Tim. And I guess we'll see you Tuesday.
Yep, see you Tuesday. So thanks a lot.
Yep, thank you, Tim. See you then.
All right.
Folks, check out Tim's website at ord-oracle.com. That is the Ord Oracle. Check out his newsletter. Yeah, fantastic. We also had him on yesterday. We actually had some viewer questions as well. You can always ask those questions if you want, and I can relay them to him. But check out that video that we had. That's going to be on our YouTube channel at Tiger Financial News Network. Some pretty good stuff. I think it helps clarify a lot of things when we're able to interact, with analysts like this. So, okay, let's, man. wanted to talk about some stuff. Well, I guess we got a segment after this. Folks, stay right there. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You watch the Tom O'Brien Show. We got a short segment left here. Taking a look right now, SPY off 5.73%. The composite trading off 5.88%. Dow Jones Industrial off about 3.89 percent. Some decent volume today as well in the sell-off. Let's take a look at, silver's really selling off in a major way, unfortunately, off 8.34%. Palantir's down, but not in a major way. You're still at support. It really is impressive how strong this equity has been behaving, at least. And then Tesla off 5.28%, but in reality, that is just like a normal day for this equity. Some of the equities that I am looking into right now, and I'm not buying anything in particular, right? But I'm really liking the play on the longer term for some of the critical minerals, rare earth minerals. Cameco Corp is looking like it's going to, it's kind of approaching an interesting buy point, right? We were talking about it at this double bottom here. I know Tom spoke about it, and then Tommy has as well in the past. So, still a little bit above that kind of. This was such a sweet spot to get into it. But it has some strength right now. You're off 3.33%. Getting a lot more analyst attention on Cameco as well. Of course, major uranium portfolio they have. On the grounds with UEC, they had some decent earnings as well. This is one that I'm looking at. And then Quad U. So, we've been talking about, with Fletch in the Den too, of MP materials, right? So they really do neodymium, but they have a bunch of different rare earth materials. How this, securitization of the supply chain for these kind of critical materials, again, are kind of going to be onshored again and kind of built out. That's MP was attractive. Now, Energy Fuels is interesting as well. They're partnering with Chemer Company to kind of strengthen domestic supply chain for a lot of these critical materials, zirconium, titanium, right? And I think in the short term, still equities are not maybe great, but these are ones that are going to be certainly following. Folks, thank you so much for joining me. I hope you have a fantastic rest of your day. We'll see you tomorrow morning, 9 a.m. with Tommy O'Brien for the morning market kickoff. Take care.